The JDB report is always using exciting terms like decentralization and agentic. These concepts are indeed exciting, but they've been around longer than you might think. Speaking to the JDB report is Timo Hotti, Principal Technology Strategist at OP Financial Group, the largest financial institution in Finland. Timo has 3 decades of experience working on these questions, and he speaks with me about why innovation in finance often fails, what can work, what is working, and what might work in the near future. Timo Hotti from OP Financial Group in Helsinki. Welcome to the JDB Report.
Thanks for inviting me.
My pleasure.
Happy to be here. Yep.
Great. I've been following your writings on LinkedIn and Substack. You are a technology strategist at, I guess, what is Finland's largest financial institution group?
Yes.
And you've been writing a lot about the topics that interest all of us: decentralization, agentic AI, embedding digital technologies into financial services. You've been at this a long time, so maybe you could just start by give me a sense in your career.
Yeah.
Core things like decentralization and agentic, what has been the arc that you've seen, that you've worked on?
Basically I work as a principal technology strategist in a bank, and the disclaimer here, it's all views here are personal. Nothing is opinion of my employer. Basically I'm concentrating on things that kind of fall between banks. So I work in a bank, but I'm interested about things, how banks connect to the rest of the world and to each other. So that's kind of my broad scope of interest, what I do. And I have to kind of warn in advance that I can be considered as a crypto critique in many ways, because of basically the lessons learned on this 30-year journey, which started way before crypto.
Yeah.
But yeah, if you talk about my background, if we can kind of divide it into 3 decades of different things. So the first decade was, it started like 95, when I joined a database server vendor that nobody today knows about. Solid DB was the name of the database. And their product was a database server that you could put anywhere. It was a high power database server, but you could run it on anything that had 1 megabyte of RAM for running a database. And so the vision that we had then was that every device someday will have a database, and systems will be built as network of interacting nodes that manage their own data.
Okay, so a decentralized vision for doing business.
It was the decentralized vision, but like 30 years ago, so I might argue that it was a little bit early. But anyway, that was our vision, and that we went for that. And my contribution basically there was the data and transaction decentralization architecture of the server. So I was designing the way how the servers talk to each other. And it's kind of now, when I look at what's happening around us, the agentic thing is about the same thing. But of course, now we're a little bit further in technology, so there are other more tools available. So we were really early. There was no demand for such agentic thinking. And really half of the solution, which was kind of the crypto and trust part, was not there yet. So we could make servers talk to each other, but we couldn't make them trust each other.
From at that point, I know you weren't working at a bank, but what would have been for a financial institution the benefit of having some sort of decentralized capability where everybody, including your customers, would be able to?
At that time, not really anything, because that was when the internet was kind of being created.
Right.
Actually, I was in Silicon Valley at that time trying to promote this technology for the infrastructure of the internet, for the routers and whatever it was running the show. And but still, even there wasn't that much demand.
Okay.
But anyway, the key takeaway from that was that I had already then fairly good understanding about what the word decentralization means and what does it actually take to get there. And it's quite a bit more than what you think. So after that decade, I switched to something completely different. During the first decade, I learned to write patents. So I switched to innovation and IPR management. So I was basically an IPR consultant, IPR manager, patent attorney, and that kind of work. So I helped other people innovate.
Okay.
And to make long story short, I saw quite a few different ways how innovations can fail. You can fail with the technology by leaving something important from your solution. If we come back to crypto today, crypto has left all the technology foundation for financial compliance for the future to be solved. So that's one way to fail a technology innovation. Another one is to create a roadmap to production that is credible and actually needed. So if you invent something new, you need to know how to gradually get it into the market. And that's typical way of failing in innovation. And the third one is of course business execution. If you innovate something new technically, then if you don't know how to actually make money out of it, it fails.
Okay.
So,
So
and that
many
was
ways to screw it up.
yeah. So there are more than one way to fail with an innovation, which is kind of useful information now when kind of trying to get something new into the market. So this decade ended when Bitcoin happened.
Mhm.
So it was an idea. I didn't go full all in Bitcoin. I didn't become a Bitcoin fan, but I kind of started to think when I saw the Economist cover page about the trust machine.
Yes, I remember that.
Many people have seen it, and it has burned to my brain that okay, is this the future of trust? And I didn't really have a good answer to that at that
Okay.
point. Nobody understood trust then, and but anyway, that idea about that the money and value can be transferred and managed in a decentralized way kind of woke the decentralization part of me up, and I actually applied for a job in a bank where I now work, and I basically managed to sell myself into the bank as a blockchain expert. And of course, in hindsight, if I wanted to make lots of money, I should have stayed as a blockchain expert outside of the bank.
Yeah.
So we wouldn't be doing this interview today, at least with this agenda.
Or we'd be doing it, but you'd be on your yacht.
Yeah, I would have lots more fun than right now. Oh, at least lots more warmer place than
Yeah.
now.
Okay.
But anyways, when I joined the bank, then we kind of jumped straight to the deep end of the pool, and we started some interbank projects. So my goal at that point already was, okay, this is something that falls between the banks. So we actually I started participating in different projects that where other banks were involved, and we actually tried to solve really kind of real world problems with this blockchain technology. And we kind of abandoned the public blockchains from the very beginning just because of the privacy,
Mhm.
because there was no reason, and there was no solution for privacy. So we thought that, okay, if we can't include privacy in a interbank communication, that's out. And that actually still is the case, I think. Um, and so we use technologies. We did projects with two main technologies, basically digital transaction management, basically R3's Corda was the
Mhm.
technology that we used in a couple of projects. And then we used on the kind of self-sovereign identity technology, Hyperledger Indy, and trust over IP thinking and that kind of things. And we did a few of those projects. One of them actually was a success, not because of the blockchain, but because of the people who were using it were so exceptionally good at developing systems that they actually could make the Coda blockchain work in a what we call in Finland DIAS, digital apartment sales platform. So if you buy a apartment or house in Finland, you actually do it today fully digitally.
Hmm.
And that was done with Coda, but it was so complicated that actually the version 2.0 is not using Coda anymore.
Okay.
But anyway, we could make it work. But every other project where we try to use any of this blockchain-based stuff, they basically stumbled into so much complexity that they failed.
And is that
And
because of the technology, or is that because of the difficulties of getting different banks to agree on a business agenda?
it was the technology that basically, when you really had to go into the details, solve all kinds of things that to make something compliant, you just hit the wall.
Mhm.
The wall in different cases was different, but it still was a wall. And uh, so basically, we did that kind of exercises like 5+ years ago. Now, when I see that the rest of the banking industry is actually trying to do the same things, I kind of have a popcorn moment that, okay, these guys are doing exactly these same things that we were doing, and it's actually with worse technology platform, meaning these public blockchains. I have a pretty good idea where they fail, but they
What
just
do
don't know
yeah.
it yet.
Okay. I mean, we're seeing a lot of excitement around now, I think. So stable coins have come to the fore,
Mm,
being used. And so let's take that one as an example. Stablecoins emerged. I mean, essentially Tether invented it.
mm,
Maybe not invented it, but became sort of
mm,
the go-to provider within the crypto
yeah.
world as a capital markets tool
Mm,
for safekeeping, but also for collateral management, margin, all kinds of things like that. Now it's being repositioned by traditional banks more as a payments mechanism. Um,
mm.
do you see it as does it have a future? Is this a suitable technology for cross-border payments, particularly in markets where traditional rails are not well developed or too expensive?
The stable coins, they look, when seen from a distance, they look like incredibly cool technology and solution to a big problem. But once again, when you go and actually go to the details, and really the big word here is compliance.
Mhm.
If you use stablecoin to make a payment between two banks using public blockchains, which is kind of what is most of the people are trying to do. If you use public blockchain, you issue a stablecoin that's usable there. You don't have really a good chance of figuring out what happens with that stablecoin in that network.
So tell me
So
what
when
that
that's
means. Yeah.
yeah, so when basically it all comes to the AML and KYC and all this regulation that banks they have to follow.
Mhm.
And if you, if a bank receives stablecoin from somebody, let's say, we need to remember that stablecoins are bearer instruments, so they're like cash. Like legally speaking, I think they are
Mhm.
cash-like instruments. And banks have very strict requirements about that. If you try to in Europe, if you try to deposit 3,000 euros cash in a bank, you have to tell where did you get it from. You need to convince the bank that it's not laundered money. And I think the same thing applies with the stablecoins. When you bring 10,000 euros worth of stablecoins into the bank, if the bank wants to stay compliant, they have lots of work to do.
Yeah.
And that raises the price tag of the whole solution to a level that is much higher than what's kind of currently advertised. Okay, the cost of using stablecoin is just the cost of executing a transaction in the blockchain.
So
And
there's
yeah,
some yeah, I can see some ways to maybe address that. One could
mm,
be cryptographic techniques. Whether it's in a Google sense, the federated learning, or if it's zero knowledge proofs, could there be a
Mm,
way to show, to
yeah.
basically bake into the systems a way to, sort of reveal whether or not something is
Mm,
credentialed without having
mm.
to disrupt privacy?
Everything is possible. For all of these problems, you can have a solution
Mhm.
probably, and even when you can even put them together in a chain that works in real life. But it in my view is that it comes with a cost that makes it uneconomic in most cases, if not all cases. So to become compliant requires so many different solutions, different point solutions to different point problems
Mhm.
that the big picture gets too expensive and too laborious and too risky for the compliance of the bank. So it once again you hit the wall. Like we hit a few years back when solving different kind of problems. This is yet another problem wall that you hit when you try to solve all the things that need to be solved to get the technology working for a bank.
Okay.
But you only see them after you have tried to solve them. That okay, now came up with something that is way too complicated
Yeah.
to be
Another
economical.
yeah, another option I've written about is so I did a piece on VLEI, verifiable legal entity identifiers,
Mm,
which digitally attach a person, like say a CFO,
mm,
to
mm,
a treasury wallet or something like that. So it's meant to provide that sort of
mm,
automated way of saying, okay, this person is authorized to
mm.
transact on behalf of this client. Um,
Yeah.
I don't know if you've looked at anything like that. This came out of a G20 initiative following the financial crisis of 2008.
Mm.
Are these solutions being discussed? Are there ways that partners in the public blockchain world could be convinced that maybe they should build this sort of capability if they want to go mainstream and go into TradFi?
Yeah, you touch a good point here. That to make anything that works, you actually need to integrate. You need to combine the two worlds. You
Mhm.
need to combine the digital transaction world, which we experimented back then using Coda.
Mhm.
You need to uh, integrate this transaction world with digital identities. So really, you kind of pushed, guided me to the next part of my story, which was the breakthrough idea that okay, if we combine digital identity technologies with digital transaction management technologies, take the best part of both worlds,
Mhm.
put them together, you actually are able. This is my kind of basic message. You are able to create such a network that has all the good things of blockchains and SSI without any of the bad things like extensive governance and privacy issues and all that stuff. It actually can be done, and
Okay.
that's what was our learning from this early project. Okay, this alone didn't work, but we actually did a couple of prototype projects where we combined Coda and Indy, and the outcomes were pretty interesting. For instance, we were able to create a prototype network for uh, digital share trading, and it was functionally pretty complete, and it did pass kind of a rudimentary compliance check, the functionality, and it was done in a few months by four programmers. So share trading network that was compliant, fully crypto-based, fully digital, uh, done in very little time, um,
Yeah.
using the combination of two technologies.
So how come that's not on the
Yeah,
cover of The Economist? How come I'm not seeing that?
that's a good question. It's it's not difficult stuff. It's just different.
Mhm.
Once again, when you then start to work your way through what is actually needed to get this done, you need to make lots of design decisions that kind of are different than what you are used to think today. Actually, I once counted how many assumptions I have had to change, and I came up with 8.
Give me one or two.
So,
Give me one or two of the big ones if you're somebody sitting in, digital work at a bank.
okay, the first of all, the data management has to be done using microledgers. So you don't have a global ledger, but every single agent has their own ledger that contains cryptographically verifiable data about what they have done.
Okay, and
So
just
you're fully,
and this kind of
yeah.
agent that we're talking about would be representing a user's account or a
It
customer
would
profile, or what are we looking at here?
we are talking when we talk about agents. Actually, yeah, that's the next. Well, yeah, the first big thing is that this all has to be implemented as agents.
Okay.
Yeah, that's the first big thing. The data management has to be done by these microledgers, where each agent manages their own data. And then the third big thing, I think, is what the agents actually represent. This concept, what I call ITL, I kind of modestly Internet Trust Layer, because why not?
Okay.
Um, how I see it, and now we get to this question of if it's a network of agents, what are the agents? And there are three different categories of agents, which are all technically similar. So you need to only have one kind of core agent software code, and the protocols are the same between agents, regardless of what they do. But they have different roles. So an agent can represent you,
Hmm.
a person. It can represent, it can also represent a legal person. So natural person agent and legal person agents, they are pretty much the same thing in this architecture. And they are participants to a transaction.
Okay.
And transaction happens in another agent, which I call context agent. And then there's a third category of agents called kind of integration agents, which are agents that represent existing legacy services that are out there that need to be connected to this network of trust. So we have person agents, context agents, and integration agents, which together can run transactions in this network that can move value, including money. And the idea here is that when you want to make a purchase transaction, for instance, somebody wants to buy something from somebody else, and then that purchase transaction needs to be settled with commercial bank money. You create this context agent. It may be, for instance, the seller who creates the context agent for this transaction, which contains verifiable transaction logic. And then once this context agent is running for this transaction, you can invite the other participants to this transaction. That, of course, the seller can invite the buyer that, okay, here we have the digital transaction context for this purchase to happen. So the person agent of the buyer joins in, presents their credentials to the context, saying, I'm Timo, and I'm over 18. I can buy this bottle of wine from this web store selling wine. And that's not yet enough for the transaction to happen. We need to have the third party to the transaction who actually can do the settlement of the transaction. So the buyer invites their bank's kind of account transfer integration agent to the same transaction. And how the flow here goes now that, okay, the person agent of the seller tells to the context that, okay, I'm committed to selling this bottle of wine to Timo, and here's the invoice to it. If you that it has to be settled for the transaction complete, and I present my credentials saying that, okay, I acknowledge that I'm going to buy this bottle of wine, and here's the power of attorney for my bank to settle the transaction if this transaction's all conditions are true.
Okay.
And then the context agent, it has a finite state machine that looks all the facts that come in, which all are, by the way, they are verifiable claims, the known term in SSI, so self-sovereign identity technology. So every communication is in verifiable claims. So when the context agent then finalizes this transaction, it sends a signed instruction to the bank that now send money from buyer's account to the seller's account.
So What's the difference, Timo, between that and me just using a debit card or a credit card to go buy the bottle of wine? I can do it either online or I can go to the shop. So what is what is the
Ah,
purpose of this?
yeah, that's a very good question. This is much more straightforward. Actually, this is really the mechanism that you need. If you look at the architecture of any existing payment rails, they are way more complicated.
Mhm.
That's interesting point. Here, basically, you see all the components already, and the amount of code needed to implement this, it's not much. So actually, what this looks complicated, but actually, what you see here is the whole picture, which you never see if you look at, for instance, how credit card systems work. It's the hidden complexity out there. It's enormous. So, and this is real time. When the context agent says that now send the money, the bank account um, agent sends the money.
So
Yeah,
this is a debit account process.
yes, yeah, yeah. So that's one thing. What else is there? Yeah, one interesting point here is that today one of the big problems, that is a new one, are these AI frauds.
Hmm.
And there's the problem that I call context fraud. So the buyer doesn't necessarily you don't have the kind of tools today to know that the context where you are kind of paying something that it's a real one. It may be a fake website
Right.
where you go and pay for something and receive nothing
Yeah.
because the website was fake. And here, because every participant, including the context agent, it is a identity agent. You can actually ask from it, who are you? So you can actually be sure that when I join this context, I can ask, are you a legitimate one? Are you paying taxes? What is the legal entity identifier of yourself? Show me it as a proof that I can verify, and that kind of thing. So you can ask from the context, are you real?
Is there a
And
privacy
yeah,
risk here, though? I mean, there's uh, with all that information going to the bank agent or so much. I mean, is that something? Is there an additional information that's being exposed here by the consumer or the user, the corporate desk, or is this just the same information but just being delivered in a more efficient manner?
yeah, this doesn't require any information that is not required by the logic of the transaction. So if your personal identifier is needed for a transaction to happen, you need to give it. But if you just buy something that where you don't need to prove your kind of true identity, then you don't need to provide it. But of
What's
course, the bank needs to know and
right?
that you are instructing the bank to do the payment.
And what are the rails that
But
this is working on? Is this bilateral API connectivity? Is this a private blockchain or building on top of a public one? What is the underlying rail here?
yeah, the underlying the network infrastructure here, it's basically the protocol that I'm proposing is basically a peer-to-peer protocol, something like DITCOM. Basically, you can take the DITCOM protocol that is known in the SSI world and tune it up a little bit and come up with a protocol that is usable here.
Okay.
So some coding needed to get there, but not much, I think.
So if you're a bank, obviously I don't see the Visas and MasterCards of the world being too excited about this, but if you're if you're a bank, what does this mean for your relationship with your clients, with other providers?
Mm.
Banks get nice fees from providing credit cards. It's a huge part of
Mhm.
retail and corporate business. Are what parts of the business would you have to be uh, undermining to get to this other business? Does the revenue stack up? Like, where do you see this going from a strategic point of view for a financial service institution? You know, just
Yeah.
because you can do this, does this make it
Yes.
something they want to do?
Yeah. You have very good questions. The big change that I kind of envision coming in due time, not tomorrow, but and then maybe not next year, but someday, I think it's inevitable, is this model that because kind of it changes the direction of the arrow between you and between the customer and the bank.
Mhm.
Today, if you want to settle a transaction, you do the business transaction somewhere, and then you kind of exit that transaction, and then you go to your bank and tell to make an account transfer. So you go to the bank to pay and to settle a transaction. In the going forward in the future, I think for many reasons, of which one of the big ones is this fight against this fraud.
Mhm.
You actually need to implement these rails so that the bank comes to your transaction to settle it. So instead of you going to bank, the bank comes to you,
Mhm.
and it does require quite a lot of imagination in thinking new business models. But I would consider it very positive in the long run because you stay compliant. You can guarantee that the transactions where your customer is participating, they are safe, they
Mhm.
are efficient. You can embed all kinds of additional services, embedded finance, and all that kind of stuff into them. So there's lots on the plus side. On the
Okay.
minus side is that you change the direction of the arrow,
Right. Okay.
and it's a fairly big change. But my view is that there are lots of positive reasons why it should happen.
So you're talking about peer-to-peer. Uh, Essentially, if you want to get to this peer-to-peer vision that you've just
Mm,
described to us,
mm,
Timo, uh, to what extent do we have to get beyond this interoperability block? This hurdle of this it's natural commercial sense that banks regard this as extremely sensitive, and so they don't want to be playing on their rivals' turf.
mm. I guess what should be happening is that we figure out a way to develop this common trust protocol. And we need to understand that we are creating a protocol that is open, so it's not specific to anything. So it's kind of this kind of next generation open source development, so that we have done this before. Linux is fully open source operating system
Yeah.
invented by a Finn. And it's run by a Linux Foundation. Today, the development is facilitated by the Linux Foundation. And the product is still open source. It's still useful, available for everybody, and so on. That was something that nobody believed is possible before somebody in Finland did it.
Mhm.
Um, and I think the similar kind of model should be found here, that we acknowledge that now we need a new protocol for trust in the network,
Right.
which doesn't require any joint venture to operate it. Because if you have something that somebody needs to operate, you don't have a network, you have a platform. We
Right.
need to go for a network, which is full decentralization, basically, which I think is possible.
Can you work
And
with,
that, yeah,
yeah, could you be working with an Ethereum or a Solana to create a compliant, uh, compatible version? Because they run networks. I mean, you could argue they're a platform
um,
instead, but I
they are
think broadly,
platforms.
yeah. Okay, so what's the difference? What makes an Ethereum or a Solana solution not viable for financial institutions? Could they not vend something for you? Because it sounds like aside from the compliance aspect, they've got
Mm.
a lot of what you're talking about already.
Well, my view is that if you do this kind of network properly, there's no need for tokens. Basically, the need for blockchains goes away
Mm.
because one of the key building blocks was that the network of microledgers, where everybody manages their own data and just connects with other agents and shares data on as needed basis locally. You don't
Okay.
need a global truth of these blockchains. So it's entirely different philosophy for doing value transfer.
Right. So
And
agentic
yeah,
AI with an identity layer built
mm,
in and built-in compliance, i.e., you can do this or that, or cannot do
yes,
this or that, depending on certain
yeah,
qualifiers, would
yes,
allow banks or other players to communicate and also transfer value without having, and they would just be doing it through agents, through essentially, I mean, not in what you're describing is not a blockchain-based solution, but rather just
Yeah.
databases that are, I mean, what is it, MSQL or something? I mean, you know,
Yeah.
you know, but essentially the agentic side now allows that execution for peer-to-peer that did not
Yes.
exist prior
Yes. Yeah. Yeah.
to AI agents being viable.
Yeah, that's a very good. So you mentioned AI agents here. Yeah, that's kind of the big thing I'm seeing right now happening with the force. The agentic AI, I think, is one of the big things that will happen. And agentic AI needs agentic trust. So, and both are kind of sharing the same ideas that it has to be kind of peer-to-peer protocol that connects them together. I don't think we are too far from actually connecting agentic trust with agentic AI into something that really rocks the world.
Timo, I think that's a great way to conclude our chat. I love it. So I'm sure you're going to be out there rocking the world in your.
We'll see.
But good luck with it. So yeah, so thank you so much, Timo Hotti from
Thanks.
Financial Group. Thank you for joining me at the JDB Report.
Thanks, it was fun.